are self-employment taxes? If you are a new business owner or a business owner, or if you're about to start a business, you are probably hearing or you have heard of self-employment taxes. Why? Because that's a big chunk of taxes that you have to pay as a business owner, and generally people are trying to lower the amount of taxes that they're paying. And everybody says like, watch out, self-employment taxes are so high. So first of all, let's understand what is self-employment taxes. But first, hi, my name is Julia. Very nice meeting you, and thank you for being here. I am a business owner, and I have spent years understanding business and finance and operations and taxes. So no, I am not a legal attorney. I am not a CPA. I am someone who's spent quite a lot of time studying this, and I decided to start a YouTube channel to bring awareness to mostly finance topics that new business owners will face. This is hopefully information that you can take to your CPA and your legal advisor and discuss with them. If you want to continue receiving information like this, please subscribe to the channel so that every time I post a new video, you get notified. I've been learning that subscribing to YouTube is not as intuitive as we think. I myself watch many videos that I really like, highly value the content, but I just forget to subscribe. So here's your reminder to subscribe to the channel if you like this type of content. Also, if at some point you figure that you like the content in this video, like this video as well, so I know that you're watching and you're liking this. But without further ado, let's discuss self-employment taxes. So self-employment tax is a 15.3% tax that is broken into two things: Social Security and Medicare. Social Security is 12.4% out of the 15.3%, and Medicare is 2.9%. Also, Social Security tax, it's capped at $176,000 in the year of 2025. This means that if you make up to 176 and above, you would only be taxed at 12.4% of Social Security tax to that limit. And also very important to know, this is your global income in the US. So for example, if you earn a W-2 salary and you also have a business on the side as a sole proprietor, as a freelancer, as a service provider, you will combine the two sources of income to get to that cap of 176,000. And this is going to be important, and I'm going to explain why in a little bit. But continuing the thought process here, Medicare, on the other hand, it's not capped, so you will continue paying the 2.9%. And also there is a bump of 0.9% on income above $200,000. And this is also your global universal income in the United States. So if you have a W-2 as the example before, and then you also have a sole proprietorship or an LLC tax as a sole proprietorship or a partnership, you would have this limit of $200,000, and then you would add an additional 0.9% on the additional income. The thing that most people don't realize is that we pay Social Security tax and Medicare tax even when we are not self-employed. If you have a W-2 salary, meaning like you have a full-time job, a normal job, take a look at your pay stub. In your pay stub, you will find Social Security tax and Medicare tax. The thing is, when we work for someone else, or when we have an employer or a company that we work for, the 15.3% tax is split equally among us and among our employees. That means that we will pay 6.2% Social Security tax and 1.45% Medicare, as well as our employer. So we or you will pay 7.65% of quote-unquote self-employment taxes, which in this case, once you have a W-2, is called payroll taxes, and your employer is going to pay the other side of it, also 7.65%. What happens is that when we decide to become self-employed, we need to pay both sides of the equation, which kind of makes sense. So we pay the employee side and we also pay the employer side, which gets to the amount of 15.3%. So I'm gonna show you in practice what it means. I have access to a payroll software because I run payroll for myself in my company, and I'm gonna show you what exactly does that look like so you can understand from the employee side and from the employer side what it looks. Okay, so this is the software that I utilize, the company that I utilize to run payroll for my company, and I am going to run a quote-unquote fake payroll. I'm not actually gonna run this, but I am going to demonstrate to you what happens when a business, an employer, runs payroll. So I am gonna run an off-cycle payroll. Start new off-cycle payroll. This is going to be for the month of February, so it's gonna be a full month. Okay, so here's a list of employees that I have in my company, and I am going to add the hours of 40 hours, for example, and this is going to be a salary amount of $2,500. So this is for the pay period that I'm paying this person, let's say that for the month. So we are going to preview this payroll, and here we can see that the cash required to run this payroll, even though I'm paying this person 2.5, is actually 2.7, and this is because there are taxes that need to be paid from the employer side of things. And I am going to see a payroll preview of what this looks like. Here it is. And here we can see that for the employee that is blurred out the name, we are paying $2,500, and we are paying in federal social security tax $155 US, which equals to 6.2%, and in Medicare we are paying $36.25, which equals to 1.45. So this is the portion that is being deducted from the employee payroll. They are not even going to see this amount. This is going to go straight to the government, and they will receive a net amount of $2,000, 157.80. On the other side, if we looked here, we can see that the employer is also paying the same amount of Social Security taxes and Medicare. And this is just to show you in practice what happens when we run payroll. The employee pays half of the amount, and the employer pays half of the amount. However, when we decide to go full-on self-employment, we need to pay the entire amount of 15.3%. So what does this mean exactly when you go calculate your taxes if you're a sole proprietor or a LLC filing as a single member LLC? So imagine that you have a business revenue of $150,000 and you have business expenses of $50,000, so your net income for the business is $100,000, and you will take this $100,000 as distributions or owner's draw from your business. This means that you must pay 15.3% taxes on that amount of $100,000. And this amount of 15.3 is divided into Social Security taxes, which is 12.4, and Medicare, which is 2.9%, which equals to $2,900. So the amount of self-employment taxes that you need to pay on $100,000 of income is $15,300, which is quite high. And this is the reason why self-employment taxes are such a hot topic, mostly because there is a way for you to avoid paying all your self-employment taxes and lower the amount of self-employment taxes that you pay. And it's usually by choosing to file taxes as an S corporation. And this is a much broader topic, and it requires a little bit more time of an explanation. So I did record another video, which is here, talking about the difference between filing taxes as a sole proprietorship or a partnership versus an S corporation, and why exactly people save money, or how people save money in taxes and self-employment taxes specifically by choosing to file as an S corp. So if you're interested in this topic, this is the video. I highly recommend you to watch it. But for today, the goal is just to simply understand what self-employment taxes are, which is basically taxes that go into Social Security and Medicare. The Social Security taxes fund retirement accounts, disability, and survivor benefits, while Medicare funds healthcare benefits for individuals age 65 and plus and certain disabled individuals. So we understood that It's taxes that we need to pay. We pay those taxes regardless if we are an employee or if we are self-employment individuals. The difference is if you have a W-2 salary, meaning we have someone hiring us as full-time or part-time employees, they are paying half of those taxes. And when we are going on our own, being business owners, we are paying the full amount of 15.3. And there is a way that you can lower that amount by choosing to file taxes as an S Corp. This is not for everyone. You need to sit down, calculate if it's worth for you, talk to an advisor, but just know that there is a possibility out there that you can lower your self-employment taxes if you fit the right category of people and business. I hope this was helpful and I was able to clarify what self-employment taxes are, and see you next time.